So y'all, I'm so happy that you are here with me today. For those of you that may not know me, I'm Bree Beers, and I own Bree Beers and Associates, formerly Lipa Beers and Associates. Our firm prepares tax returns for small businesses and individuals, but we are aware that there is so much more to a good accountant than just a properly prepared tax return. So we are client-centered tax accountants that strive to educate our audience, because we understand that as non-accountants, as non-accountant taxpayers and business owners out there, y'all don't know what you don't know. So we want to create some clarity on that unknown for you. In addition to tax prep and education, we provide and we love tax planning. And it's our jam because it's where we get to sit down and strategize with our clients to minimize their annual tax burden and help keep that extra cash in their pockets to help them invest it into themselves and or back into their business. You may be watching this in a variety of places, but if it is not in our awesome Facebook community, Money, Taxes, and Finance for Small Business, and you are a business owner, then you should definitely hop on over there and check it out. It is an amazing and supportive community where we post daily and we provide multiple live learning events every week. So for those of you that may be new to that group, Money, Tax, and Finance for Small Business, then Mondays right now at 9 a.m., that's our normal live training session. We talk about the topics y'all are asking about most often. And then on Thursdays, usually at 2 p.m. Mountain Standard Time, we go over updates from the week and we open it up for your live Q&A. So live question and answer. So if you ever can't make it to a live, past lives are in the video section of the Money, Tax, and Finance group, or you can watch pretty much all of them on our YouTube channel if you go over there and subscribe. I like the searchability of YouTube better as well. All right, y'all, today is part 2 of our business expense series. Last week, we went over the top 10-ish business expenses for business owners that you guys can take on your business tax returns. And today we're specifically going to talk about the business use of your automobile. This is an area I get so many questions about. And so we're going to talk about how you best handle that and kind of help you to understand what it means, like what exactly you should be deducting and how. So we're going to talk about 2 methods you could use. We're going to talk about the standard deduction and the actual cost. Okay, but regardless of which one you take, y'all, you have to track your mileage. You got to. You have to track your mileage. So if you are an app person and you love using your phone apps for things, then our favorite to recommend, and it's the one my husband uses as a real estate agent, is Mileage IQ. You can, if you turn on notifications on this one, or pretty much any of them, really, when it comes to the mileage tracking apps, it's a matter of your preference and how you navigate. Okay, they're all very similar. And the ones I've tried, that I've looked into, and there's 5 or 6 of them that I've looked at that are free, that all have pretty similar functionality. But Mileage IQ is nice, and I think the other one's nice because if you turn on your notifications, then every time you get home, it's going to tell you the trip you took and the places you went, and you get to swipe. It's almost like, what is it, Tinder, where you swipe right, swipe left. So you get to swipe one way if it's business, one way it was personal mileage. And then at the end of the year, it tracks how many total miles you drove and how many business miles you drove. So it's fantastic. It's, to me, the easiest way to track your mileage. However, I know not everybody is an app person. Some of y'all might be notebook people or pen and paper. Okay, so you can keep a notebook in your car. I'm going to show you guys real quick. So I have a PDF tracker for those of you that are pen and paper type people. So this, if you look in the comments, I believe, or the description of this training, there's an opt-in. Click there. It's a link to not only this PDF version. So if you're a pen and paper person, PDF version. Okay. And if you are more of a spreadsheet person, we have a spreadsheet that has formulas in it that you can track as well. Okay, that you can use as well to track your mileage. So whether you're an app person and you want to use your phone, there's stuff for that. If you're all about spreadsheets, Excel spreadsheets, we've got this tool for you. Or if you're a pen and paper type person, you can print out our PDF tracker. All right, and any of them give you the same benefit. Okay, the whole point is that you're tracking your mileage. All right. If you click the link right now, I need to make a few tweaks. So right now you'll get an email saying we'll send it to you when it's ready, because my VA is making just a few more updates to it that I caught last night. So, but you'll get that as soon as it's ready. So let's talk about whether you use the app, whether you use a spreadsheet, whether you use a notebook. there are key components, key pieces of information that you have to be tracking if you want to properly deduct auto expenses on your tax return, okay, for your business. Okay, and there's some do's and don'ts. If you have an office that you actually drive to, okay, like not in your house, okay, then driving from your home to your office or your warehouse or to your place of business, that's not deductible, you guys. That's considered commuting. So those miles are not deductible. Same with your drive home. But if you have a home office, basically any driving you do that is business related is going to be deductible to you as a business expense. Same goes for any mileage from your office to any other places of business. So some common examples of driving that you're going to do for business, right? If you are meeting clients or vendors for lunch or for dinner, then your mileage from your office or home office to the restaurant and back, that's going to be a tax deduction. If you need to go to your client offices or your clients' locations to do work, that is a business expense. If you need to go to the store to pick up supplies because you don't like Amazon Prime or to, same day office or any delivery services, right? If you do want to go to a store to pick up supplies or you have to go get anything for business, guys, that mileage from your office or home office to the store and back, those are business miles. All right. For my real estate agents, driving from your office or home office to all of your location, the places you're showing, that's the word, your showings, that mileage is deductible. All right. I have so many people that tell me that they don't track their mileage because it's not worth it. They're like, oh, it's not worth the deduction to track it. But you guys, you'd be surprised how fast those miles add up when you're actually tracking them. All right. And it's not, once you get in the habit of doing it, it's not a difficult task. Okay. It's something that becomes habit. Okay. It's either, you have the app that you're using and you just automatically are, logging things or marking it when you get home. Maybe it's that you are a pen and paper person. So you print this PDF log and you put it in your car, you fold it up in your car with a pen, right? And you just log your miles that way. Or maybe it's the spreadsheet, which you can also open on your phone or fill out when you get home. Okay. So whichever method you use, it just needs to become habit so that every time you're driving for work, for business, you're logging those miles. Because for this year, for 2020, it's 57.5 cents per mile. Okay. And so if you're driving, even if you're 1,000 miles, right, in a year, if that's over a $500 deduction to your business. Okay. And for those of you that drive way more than that, okay, those miles do add up. So I challenge you to not convince yourself that it's not worth it because, they're not worth what? Not worth the few extra minutes it takes to develop this habit in order to track it. Like, it's worth it. Okay, no matter how small your deduction is, I believe it's worth it. I do want to talk real quick to my Uber, Lyft, Uber Eats, DoorDash drivers, okay? All of the miles you put on your car for those services are going to be deductible. And those total miles driven are going to be provided on your year-end report, at least from Uber and Lyft. They provide a year-end report that says how much you earned and how many miles you drove for them. Okay, I assume Uber Eats and DoorDash does that. I'm just not positive. But keep in mind that any additional driving you do for that, for your Uber and Lyft jobs are going to be deductible. Because last I heard, what I understand is the app, or when you get your report, it only shows the miles you actually drive for your clients, right? But your mileage from your home to your first pickup and from your last pickup home, that's going to be deductible if you have a home office. Okay, and we'll talk all about home office next week. And they're not going to be included on that report. So it's important to still use your tracker to track the miles you're driving. Okay, because the report from Uber or Lyft is not going to give you all of your miles. It's only going to give you like your chargeable client miles. Okay, but there's other miles that you can deduct as a business expense that won't be on that report. And then if you're back to my Uber Lyft drivers, if you are an Uber or Lyft driver, maybe you are one of those ones that gets water and snacks for your passengers, right? Then again, your mileage from your home to the store to pick up those supplies and back, deductible. Okay, so all the mileage, it really, really does add up. So proper record keeping. So what does, you can count your miles, and as a tax preparer, I just want your total miles. Okay. I just want you to know, I want to know how many miles total you put on the car in the whole year. So your total miles driven. And I want to know how many of those were business related. Okay. But you need to keep additional record keeping, knock on wood, should you ever get audited. Because if you ever get audited, what they're going to look for is your records that show complete information of the miles you're tracking or the miles you're deducting. Okay. So if you look again at this tracker, it includes everything you need. So the date for the miles you're deducting, where you're going. Okay. The date and time, description or purpose. That could be client dinner. It could be getting supplies, showings if you're a real estate agent. And then from and to. Okay, so from your home to the restaurant, from your home to, I would put the address of the first showing you go to. I'm just specific like that. Okay, odometer start, odometer finish. So what's your odometer at now? What's your odometer at when you get home? And your trip mileage. So obviously your trip mileage is going to be your difference. And then at the bottom of the page, your total mileage so this is going to track your business mileage. Okay, if you're using an app, all right, if you're using the app, the date, the time, your to and your from are all just tracked by your GPS and this is the app itself. And then there's going to be a memo section where I want you to write the details, who's the client you're meeting or what's the purpose of the meeting that you're going to. You want it to be accurate, meaning you have backups for all these individual expenses. That's how any expenses, you guys, if any expenses you're taking on your business, you want to make sure you have support for them. But mileage, travel, and meals are the three most scrutinized when the IRS is looking at a tax return. So those are the ones you really want to make sure you're taking extra care to deduct, okay? They're not things that aren't allowed. They're just the areas where people tend to take advantage the most often. So the IRS has learned that these are the expenses where they really need to hunker down and review those records when they are reviewing returns. Okay, so I told you there's two methods you can take. There's actual expenses versus the standard mileage deduction. In 2020, I said the standard mileage deduction is 57.5 cents a mile. I might have said 58. That was less. 57.5 cents a mile. All right, and this is absolutely the simpler of the two methods. Because for this one, you just need to track your business mileage. Okay, that's it. If you want to take the actual expenses, then you are going to have to track all the money you actually put into the car. So all your gas, all your repairs, those are the big ones, right? Your registration fees, your insurance, your car payment interest, all of those things, you'd have to track them. And then you have to track your business mileage and your total mileage because you have to figure out what percentage you're actually using your car for your business. So example, you drove 10,000 miles in the year and your business mileage tracker shows that 2,500 of them are business. Then if you're doing the actual expense deduction, you'd get to take 25% of all of your auto expenses as a business deduction. Depending on how much you drive, there is no one that's always better than the other. The standard mileage deduction tends to be pretty close or advantageous for those that don't use their car, close to 100% for the business, okay? And there's very few that do use a vehicle 100% for business, right? Unless it's like a company van, or a company vehicle where you have your own personal vehicle for personal use and then you have this separate business vehicle, usually the actual doesn't give you a lot more advantage unless you take some bonus depreciation in the first year that you buy it. Okay, and we're not going to get into a whole lot with that bonus depreciation today, but essentially it means you get to take more of the cost of the car in the year you put it into service instead of taking a little bit of the cost of the car over the life of the car. I do want to just a quick reminder that even if you take standard mileage, so if you take the standard mileage deduction, you guys, you don't have to track repairs, gas, taxes, oil, insurance, vehicle registration fees, okay? The standard mileage deduction is calculated to take into, account the average to cover all of that, including the depreciation or use on your vehicle, Okay, but what it doesn't include, what you still get to deduct in addition to a standard mileage rate, is your parking and your tolls. Okay, your parking and your tolls you get to take regardless of whether you take standard or actual business mileage deductions. So I get the question a lot, can you switch between the two methods? Yep, but there are rules and limitations. Okay, if you switch from standard mileage, taking that standard mileage deduction of 57.5 cents a mile to taking actual, okay, you will have to reduce the tax basis of your car by the portion of the standard mileage rate you've already received. That's why you have an accountant. I know everything I just said, you're just like, what? That's why what your accountant does, okay? And then if you do use actual cost and you take any of that bonus or accelerated depreciation I mentioned, then you can't switch back to standard. And the reason is because essentially you're trying to double dip if you do that. Again, if you jump on this mileage tracker like today, like early in the morning, it's going to tell you it'll be sent to you as soon as it's ready, because I just had a few tweaks that I noticed last night that I need my VA to fix before I can actually send it out to you guys. So, but it's there. Again, you'll get the link that has both the PDF version that you're looking at and the Excel version tracker that's going to have formulas in it. It's fantastic because formulas are always great. Or again, if this isn't your jam, there's plenty of free apps out there as well. Okay, so any of these options are working, just make sure you're using one of them. Okay,